Hi, everyone, and welcome back to the Texas Business Court Insider. I'm Kate Ergenbright, and today we're going to be talking about something a little bit different than our typical Texas Business Court and corporate governance content, but still an important topic with respect to Texas's efforts to attract business to the state. Today we're going to be talking about the Texas Stock Exchange and Yall Street. Now, to break those down with me today, I have my colleague Thomas Verity, who is a corporate M&A attorney here in the Norton Fulbright Houston office. Thomas, let's start with the basics. What is the Texas Stock Exchange and what is Yall Street?
Two slightly different concepts, but both very much related. Starting with Yall Street, Yall Street is basically a movement we've seen from some of the largest financial institutions in the U.S., Goldman Sachs, J.P. Morgan, to invest and relocate significant resources and employees into the Dallas, North Texas area. While Dallas has historically been a financial hub, this is a massive increase in the amount of employees and groups that they intend to live and work in the Dallas, North Texas area. And it also has promoted certain other business interests to focus on Texas and that area. That leads to the Texas Stock Exchange. This was announced in 2024, and it is backed by some of the biggest names in finance and wealth management: Charles Schwab, Fortress, BlackRock, Citadel. When it was announced, they had initially raised $160 million as part of the launch process. As of September of last year, that number was up to $250 million. And the goal of the Texas Stock Exchange is to be a true challenger and market entrant into what had been historically a duopoly between NASDAQ and NYSE.
And Thomas, what do you see as the driving force or forces that have led to the creation of the Texas Stock Exchange?
There's been a few factors. One is that companies have been unhappy and quite public about the escalating costs that they found associated with NYSE and NASDAQ. The Texas Stock Exchange has indicated that they think they can be more innovative when it comes to cost control. And so unhappiness with costs, and also outside of financial considerations, a lot of companies, particularly in the energy and infrastructure space, have been unhappy with the ESG requirements imposed by some of the traditional exchanges, NASDAQ in particular. And so there is market demand for an exchange that doesn't take into account non-financial considerations when it comes to listing. Another significant factor is just the economic growth in Texas and the Southwest region generally. There's been well-publicized announcements of companies relocating to Texas, moving their headquarters to Texas. And this is a natural extension of trying to kind of grow that hub and make it an efficient market, both from a company perspective, but also the markets in which they trade.
Now, Thomas, from a regulatory perspective, what hurdles did the Texas Stock Exchange need to clear to open, or are there any left for the exchange to go through?
So the primary regulatory hurdle was to register with the SEC, and that registration was under Form 1 to be a national securities exchange. The filing was made in January of 2025, and they received that approval from the SEC in September 30th of 2025. So moving forward from a regulatory perspective, no significant hurdles are expected, and trading is anticipated to begin either middle of this year or third quarter of this year.
And are there any trends that you're seeing in the type of companies that you expect to be early adopters of the Texas Stock Exchange?
There's a few different trends that I think of note. One is companies that have either already a strong presence in the Texas or the Southwest, or companies that want to have an increased presence in the area. This Texas Stock Exchange has significant backing from the Texas government, including government members that are going to serve on the board. So agreeing to be part of the exchange is, in essence, telling the Texas government, we're here for business and we support your interests here. Other companies, such as ones I alluded to earlier, that may have had a harder time complying with some of the ESG requirements that NASDAQ and NYSE required. Those are companies that are going to be very interested in an exchange that, at least to date, has advocated that they're going to be looking at the financial aspects of a company when qualifying and maintaining a listing. And that's really the key that matters to them. And so these additional considerations that were raised in prior years are not anticipated to be part of the ongoing Texas Stock Exchange dynamic, at least.
And as I understand it, when the Texas Stock Exchange opens later this year, it's not going to be the only exchange in Texas, right?
That's correct. Shortly after the Texas Stock Exchange was announced, the NYSE made the decision to move their Chicago headquarters to the Dallas area. They had been in Chicago since the 1800s, but by relocating that exchange and not going through the process of forming a new exchange like the Texas Stock Exchange is doing, they had the advantage of being the first move there, with Trump Media being the first company to publicly announce a dual listing on the Texas or NYSE Texas. And now we've seen 100 companies have dual listed on NYSE Texas. And so it will be interesting this year to see, once companies are able to go through the avenue of the Texas Stock Exchange, what the competition will be like with NYSE Texas. And while NASDAQ has not opened its own exchange in the Texas area, it has moved one of its key regional offices to Dallas also. So if the Texas Stock Exchange is successful, if dual listings continue to take place on NYSE Texas, I wouldn't be surprised to see NASDAQ make a move also.
Now, the New York Stock Exchange and NASDAQ are known players. Are there any distinguishing aspects of the Texas Stock Exchange from a legal or regulatory perspective that companies should consider when deciding where to list?
Absolutely. One of the key considerations, and one that the Texas Stock Exchange has not been shy about advertising, is that this is a new exchange. They are not beholden to decades of prior practice as the NYSE and NASDAQ are. So that gives them the opportunity to be innovative, whether that's on trading platform, whether that's on listing standards. They think they could be nimble and react to the needs of companies that want to trade. Now, in considering whether a public company wants to pursue an exchange, I think there will be a lot of interest to see what trading volume is going to look like on these exchanges. That's going to be the key when considering any exchange. And so these first companies that do launch on the Texas Stock Exchange, I expect the market will be watching closely.
Now, generally speaking, what types of things should public companies or boards consider in evaluating whether a new exchange is a good fit for that company to list on?
Besides the volume points that we just discussed, I think one of the keys is what are the benefits that these companies can gain insofar as listing on the Texas Stock Exchange versus the traditional two. And in particular, that's a question that they need to ask is, given the backing of the Texas government, given this is part of the broader Y'all Street and Texas movement, is this region important to our business? Is it important to our customers, important to our investors? Is it part of our identity? Because if that is the case, and the product of the Texas Stock Exchange ends up, and I believe that they think it will, being on par with the mechanics of the NYSE and NASDAQ, then there's a lot to be gained politically by being a first mover and a supporter of the exchange and kind of one of the bell cows from the outset.
And how do you think that Y'all Street and these new exchanges could impact, if at all, the recent reincorporation trend in Texas?
It absolutely has the potential to accelerate it. Just by way of one data point, just a few years ago, for companies IPOing with market caps over $5 billion, 100% of those were companies that were incorporated in Delaware. And in the last couple of years, with Dexit and Texas marketing itself as a destination for relocation, they started to take a meaningful chunk of those IPOs. When you couple that with the growth of Y'all Street, with financial teams moving down from New York or Chicago, and also the exchanges in themselves, it just creates an even more pro-business environment, which Texas prides itself on, that also it really creates a centralized financial and corporate law landscape that, the hope is that will make doing business more efficient generally, and certainly more efficient in Texas.
Now, before we wrap up, Thomas, if we pretend for a moment that we have a crystal ball Any predictions on what the Texas capital market system may look like, say, 5-10 years from now?
Well, it's no secret that historically capital markets has really been dominated by the New York area. With the growth of Wall Street and with the growth in the energy and infrastructure space, coupled with what we're seeing from a Texas corporate law perspective and also the growth of these exchanges, there's a meaningful chance that Texas is able to challenge as a second hub for the capital markets. Whether that starts in energy and infrastructure and expands to other sectors remains to be seen. That certainly all the pieces are there, and it certainly has the support of local businesses and the government.
Thanks, Thomas. And thanks for watching the Texas Business Court Insider. Be sure to hit like and subscribe to get notified of our new videos. And don't forget to check out our other content, both written and videos, at the Texas Business Court Insider Hub. The link will be below this video here.